Hello, this is Futures Trader from the EasyAlgo Discord community, and in this video I want to share with you my refined process of finding money flow divergences to trade and what I look for and what I do to enter those trades. This has been a long time in coming. I've worked on this for a while and you're seeing it as it happens. I've been sharing everything with the whole community like an open book, and what you see here is more of a packaged product and it's refined, and this list that you see here, you could pause and read it all if you want. I'll just summarize it really quick and then talk about it more as I do the video to try to keep the video shorter. So you want to look at assets, you want to look at different crypto assets on different time frames, and you're going to start looking at the TDIX money flow and how the price is going. If the price is going the opposite direction as the money flow, you've got a divergence, and then you want to start looking at that on those time frames around that area where you found it. Say if you found it on the 4 hour, you might want to check the 5 hour or the 3 hour as well. You're going to need the GAN box tool because you're going to use this to create a rectangle, and I'll show you how to set the settings for that and how to draw the rectangle in the video. And you want to wait, once you have the rectangle, wait for price to retrace into that. Basically what that is, what you're drawing is a supply zone or a demand zone, like an order block from a swing high or swing low, and when price revisits that, you'll see a reaction, typically some volatility, some increase in volume, and then you know you got in the right zone and you're going to have a pretty nice trade. Make sure you take your profit. Some of these trades you can let them run, like the swing trades, but you need to take profit. It's better to take profit. It's superior to take profit often. And I can explain that really quick, but when the price goes up, you're going to have your little ups and downs on the way up. But if you take your profit at little peaks and then get back in on a small pullback, you're going to have more money to trade with. You're going to compound your gains. So you're using this to get assured directional bias. But also when this occurs, when this divergence starts to play out, you'll see, some higher, I guess, more momentum in that direction. The price will move aggressively in that direction in many cases, depending on the time frame you're on. But you can set your take profit at liquidity lines, IndicatorX value lines, other key levels, and make sure once you're in the trade, you want to pull your stop loss into the green. It's so important. I mean, you're in this to take profit. You don't want to get round tripped. It can happen. Anything can happen in crypto. The markets could move. Some news, FUD could come out, and then everything could go down while you're in a long, or it could pump while you're in a short. So make sure you take your profits. I can't say that and stress that enough. I've made a little list here to kind of save time and just pump this video out, hopefully, and get it done. Hopefully my internet will work all right. It's been kind of slow today. And my cat's here sitting beside me. I'm wondering if she's going to interrupt me this time, but we'll see how it goes. So this is Pengu on the daily, and you can clearly see this is the money flow wave. And the money flow was coming up as the price was going down, so you have your divergence. And if you don't know about divergences, you can check a divergence cheat sheet somewhere. They're all over the internet, and they'll show you, in this case for a bullish divergence, you're looking at the bottoms, and in this case the bottom of the money flow and the bottom of the price. So as the price came down, the money flow came up, and you found your bottom here. And what you do is you take your rectangle tool, well, the GAN box, this is your GAN box, and you find it over here on the same menu with the fib retracement, and you go down to GAN box towards the bottom, and you click on your GAN box, and I'll have to click my settings on it, but basically you just draw a line. Let me zoom in on that to kind of show you exactly what I'm doing. I'm going to start, once I click the GAN box, I'm going to start with this last opposite color candle before the bigger candle and the big move starts to occur after it's bottomed out. So I'll start with, say, the top of the candle and click it, and then kind of just pull a box to the right and make sure the the bottom of the GAN boxes at the bottom of the candle include the wicks. Now I can check my settings that I have this on here. And this is my settings for my GAN box. The only thing I really have is the 0, the 1, and the 5. But the 0 and the 1 is totally transparent. But I have like a line for the 5, and it's this color. So I have this line right in the middle, right at the 50% of the box. I've got my box kind of transparent just because I'm just using it as a reference. I don't really want it junking up my charts, and I just want it to kind of highlight the area where I'm looking to enter a trade. So when price is coming down, in this case, as the money flow came up, a reversal is bound to happen. And so in this case, you see a candle that's big, like a bullish engulfing, and you start to see aggressive price movement. And it pushed away from there, showing that, okay, people bought there. And usually what this is a reversal before the money flow comes up and crosses into the green. And when that happens, you have like you've identified like a demand zone. And when you draw this box, price will often, not always, but it'll often go up and then come back down and revisit that box. And right there is your entry in this box. So when it reaches this, you could go down to lower time frames, but just for time's sake, you want to make sure you enter in this box. So that's your entry box. It's really nice to get around the middle line. Sometimes price will come back down all the way and tap the liquidity line, like if you had your IndicatorX on, you'll see this green line, and sometimes it'll wick down and hit that. I'll show you another instance where that happens. So that's how you find the trades. You want to just look at different assets on different time frames. So I made a list. You're going to have to scan yourself to do it yourself and train yourself to do it, because I just want to save time here and show you, what you're doing and how often it is, and it occurs on every time frame. So I was looking at Sky AI on the 12-hour, and you have another instance of this, and this is what you're looking for. And price was coming down, preparing to reverse. You had a strong move up, and some cases you also have an RSI divergence. But in the demand zone here, you'll notice that price tapped into it and wicked into it like once here, almost made it here again. So it went up and came back down and then wicked. And so when you see that, it's a really good sign that it's getting ready to run. And you often have these massive moves after that happens. This works on shorts as well. It's a little trickier on shorts, but it works. So I will look at the 6-hour on deep, and it really helps if you go through and add all sorts of different time frames, because sometimes the money flow divergence won't appear on every time frame, but in many cases, like when there is a money flow divergence present, it will show on neighboring time frames. Say like if it's on the 6-hour, you probably see it on the 5. It's very slight, but it is there. However, when you look at different time frames, you're going to see it more defined, and that's going to help you to set a demand zone. And speaking of, or a supply zone, speaking of which, you don't always get a retap. You don't always get that. So that's why you want to start using your 200 SMA. And in theory, the 200 SMA goes up and down, trying to catch up with the price, averaging out, the price of the last 200 candles. And you don't want to enter too early in some cases, because sometimes you will find divergences like here. You could have traded it. There's a very slight divergence right here. You could have traded that, but it wasn't after this big dump, it wasn't really that close, especially if you had seen a divergence like over here where the price is so far away. And I'll try to remember to show you other instances, but sometimes when the 200 is sharp, like at very having a very sharp curve downward or upward, it's just not ready for taking the trade. But when the 200 kind of starts to level out a little more and is almost kind of parallel with the price and it gets closer, you'll often have, especially when price finally gets above the 200, you even have bigger moves. So this, you could have entered here, you know, and this could have been, say if you entered on this wick, you could have held this for like almost a month, or you could have traded it over and over while you traded other things, which is the wise way to go. It's like why would you want to hold a trade for a month and rack up trade fees when you could have just entered here and took profit right here? In 6 hours you could have got 24% times whatever leverage, and then you could have waited and re-entered here because this is so early because it hasn't even hit the 200 yet. But there are many different examples of this, and there's just more than I can shake a stick at. So I just brought some examples, and here's another one that sometimes it's not always going to come all the way back down like that, but you'll see it tap the entry zone box pretty early. Like here, it had an aggressive move up, and then it came back down and tapped it, and then you had a big move. It just totally bounced. So you want to watch out for that. You want to watch out for candles like that, like a momentum candle or a candle with a big wick. They're good signs to show you that this reversal is occurring, because it was coming down and then right here it reversed. And like with any trading, if you find TA or find situations using your technical analysis on higher time frames, it's more accurate, and lower time frames aren't as accurate. They don't stick as well. You may find more noise and false signals, but you can use this on low time frames, and I've done it, and it does work for scalps. So I'll look at some other ones. I'll show you some shorts soon too. Let's see, Griffin is a 3 hour. This is not the one. This isn't the one. Maybe it is. Yeah, there's a money flow divergence here. So this one has it. Price came down, the money flow came up. You watch for this fast MA to cross back in to bullish sentiment above the money flow line. And when that happens, especially as the money flow starts to get closer, of course, when you think you might have a bottom, start drawing your entry zone, and you'll see this. I mean, you could have got in over here after you've seen these big candles bouncing around right on the middle of that line. So remember, when you do this, you just use your GAN box, and then you click on the top of the last opposite color candle and draw your box, and then make sure it just lines up with that entire candle, including the wicks. And look at that. You will see this a good bit where the price will hit the middle line of it. It's similar. I would think it's probably similar to like an equilibrium box in a way, but it's different. It's just 50% line is often respected in trading, whether it's 50% line of a big candle like a fair value gap or other things. So it's nice to have that 50% line marked, but price won't always get to it. You may want to enter up here. And the cool thing is, once you're, even if you enter here, like if you measure, like price only went down 1 point, let's say 2%, so you can still use a good amount of leverage within that box. You really pinpointed your entry. And you'll notice these things happen, like the volatility around the time it hits that zone, and more momentum going up rather than down in this case. And so then it crosses the 200 and boom. So that's what you're looking for and why. And the reason here, I wanted to make this point too. The reason here that you're not drawing your demand zone over here is because it's not the bottom. You always want to draw your demand zone or your entry zone box from the last opposite color candle on the bottom. And this one here was the bottom. It's the lowest point. Now, what you have here is a change in market structure, because this was a recent high, and then you had a lower low, but then all of a sudden you had a higher high and a higher low in the box. So this here is, you know, your market structure change. You know, you had something like this, and right there is your higher low. And oftentimes you'll see these patterns which are like inverted head and shoulders, or head and shoulders if you're looking for shorts. And that's basically what it is, and you're using your demand zone. But the thing about it is it's so simple, and you really don't need too many other indicators. I like IndicatorX because you want to take profit at these value lines, or these, like, let's show you up here, I betcha. Probably way up here. Well, in many cases, like, you want to take profit at these IndicatorX lines, because you will get rejections. If you're an EasyAlgo, you know that IndicatorX value line, or I'm sorry, liquidity lines and value lines, often price will react with those and reject on those. Like even like this one here, you know, price came up to it, couldn't get above, and then went down. So these lines, they're called value lines, and these light colored lines, they're liquidity lines. You want to take your profit on lines like that. But in this case, it's a 3-hour time frame, and you had a big move. And what you want to do is, once you're in the trade, just kind of keep evaluating it, watching it, and then check, you know, is it still above the 200? You know, look at the higher time frames and see if you have reason to believe it's going to keep going up. Because, you know, you could have held it and then came back like a week later, who knows, and had a whole bunch of profit. So hopefully I'm not forgetting anything. I'm going to check my list really quick. And okay, we got the GAN box. I showed you how to do that. Showed you how the price reacts aggressively often with these order zones, or these order blocks, where to take profit, and make sure you pull your stop loss into the green. That is so important, because, you know, everybody wants to get in a big trade, make a bunch of money, but if you don't set your stop loss and you don't pull it into the green after you're in some crazy profit, then, you know, it could dump, and you could get round tripped, and you don't want that. All right, so I could keep looking at these. I'm gonna try not to waste too much time, but I'll try to go through them quicker and just show you. This is what you're looking for. Very slight. Even this is multi humps. It's good when it's one big hump and deep. Sometimes, like, it won't play out until it's right at the 50 line of the TDIX, where it's getting ready to turn green. But in many cases, this is all you have to do, and it helps you find the bottom. Because at any time when you have a divergence with the money flow, that last crossover from this white line, this fast MA crossing this middle band of the money flow, that could be the moment right there when it confirms. That could have been it. And so you have your lowest point here once again on this one, on PopCat. You drew your line, your box, on the last opposite color candle. It's a little off there. And then you waited, and then in this case, price barely, I don't even have it right. There we go. Price barely tapped it. It barely tapped it. So it can help you to watch this, and sometimes you'll have shark fins right when that happens. So watch that for watch for shark fins on different time frames as well. But it usually, it is very safe to enter at, like, say, close to the top of the box, or if there's a liquidity line, like in this case too, there was another entry here. You could have entered this twice, technically. And this is why, another reason why I say take profit, because and this makes the point here. You could have entered here when it wicked here. Even you could have even entered on this next candle after you've seen that big bullish pin bar, and then took profit at this value line and waited, and price came back down to it again. You could have entered again, and it hadn't even gotten. You could have taken multiple trades, even like a third one with the shark fin, because from that point on, you've caught the reversal. Once you see price bouncing off of that demand zone, you've got a reversal. You're going to look for things like this fast MA crossing this slow MA. After this happens, these moves are going to be big. It's just like go long right over here. Go, not maybe even there, but when you see this cross right here, tiny little shark fin right here, go long. Or just go down to lower time frames and get in a long. So it's going to usually have a really big move after it finally busts above the 200. I'm not going to explain all the mechanics of this. I did that in my first video on this channel, why I believe that moving averages become like a dynamic resistance or support that kind of pushes price into this deep, strong divergence, even a money flow divergence. And then that's why you have like explosive moves once it starts to play out, because at a certain point, buyers step in, and you're looking to trade with the big buyers, or the sellers, the whales, or whoever they are, the market makers, smart money. Let's just say that smart money guys. And get to a certain point, you're like, oh, there's a key level, and they set their orders, and they don't really fill their order every time, and then the price comes back down to it and fills their order. They adjust it a little bit maybe, and then you get in, and price never returns to that level for a long time. So I'll keep looking at these. This one I wanted to show too is a really good example of why you should consider setting your like a limit order in. Like when you go to enter your trade, set a limit order in your box, and you want to watch it as it happens, but it can happen so fast. And I honestly, I set my stop loss at right after I'm in the green, but I watch it. So like if like I get into a trade and it's not working, I will cut the trade. I'll close it. But if it wicks up like this, I'm like, okay, wow, what a candle, dragonfly doji. I could have pulled my stop loss way up here. I could have entered here and then pulled my stop loss up to here, even up to here, because after seeing a candle like that, I know it's probably going to pump. But in this case, Chill Guy did this. You have this money flow divergence, and look at this. Money flow was coming up, but then it came up sharper. It came up even sharper towards the end. And it was going to be in the green money flow soon. But even now, you had this great like hit down here. Like somehow they pushed the price down and it tapped that zone, and it took this liquidity line. So you want to watch for that. If you really want to be really careful and safe, you can set your entry for like the bottom liquidity line, but those don't, the price doesn't always get down to that. That's kind of more rare, but you could set your stop loss after the liquidity line too. But I would give it a little room to breathe. I wouldn't set it right at the same line. I would set it like a little bit below it. That way price might still take the liquidity but not hit your stop loss. But in this case, this is a great example of a quick, easy trade where you could have made a lot of money if you would have just saving. If you entered here at the middle line, you could have made like 52% in a day, and that's quick. That's really good. If you're using 10x leverage, it's 520% profit. So that is how you do that and what you're looking for. I'll quickly show you some things because I have to end this video soon. I'll show you some shorts. Joop 12. I have a lot to do this week. Okay. No, it's not. Oh, here we go. Here we go. No. I had it marked. Oh, here we go. I had it marked and somehow it didn't save. Sometimes my internet's so terrible. I'll mark up my charts and then it won't save. It's annoying. This one here, it had such a big, like, supply zone. Wait, I'm sorry. This one would have been it. But in this case, it came up into it kind of here too. You don't always get a retap. This might. There was another one I found. Whoops. There was another one I found on this one that I can't have to look. It was a money flow divergence where I seen it perfectly tapped it. I don't. I'll just move on to the next one because I don't have a lot of time. All right. Sui. All right, here we go. Here's a good example of a short. So when this works for shorts, but it's a little trickier. And once again, like, you really generally have a bigger move once it crosses the 200. But you know, in shorts, like, you can take profit whenever you feel comfortable, and with any other trade too as well. And you might want to take profit when it hits the 200, or of course a liquidity line. But in this case, you had the the money flow going down and price going up, and so what you're looking for is you continuously have higher highs, right? And basically, eventually, it's just not going to make another higher high. You got a market structure change. You have a confirmed, like, reversal. You start getting the lower highs, and then right here is like your lower low. But in this case, you're getting in on a lower high. And you in this case too, you had a good shark fin. You had a nice bearish shark fin at what was a pretty high point where the money flow was getting very close to the 50 line. So even right here, when the shark fin was happening, the money flow was almost here. So you should have known at that point, because the money flow was about to turn into red money flow. That's where you want to start looking to draw your supply zone. And that's what I did here. I drew a little rectangle on this green candle. And then look, price hit here. You could have entered a short, took profit. It almost hit it here, and you could have entered a short here. And, you know, once you have this happen, you can go down in the low time frames and start looking for bearish shark fins as well. And then just employ the normal IndicatorX and TDIX strategy. You may find bigger moves because the divergence is starting to play out. And that's the whole point of this money flow trading, is that you're going to get more aggressive moves typically, because it's like a lot of pressure has built, and it's really starting to play out when that happens. So I'll show you some low time frame stuff. Now on the low time frames, you're not going to see the supply and demand zones as much because they're not usually reversals. Oh, I think I already looked at that one. Oops. I'm gonna look at the 6-minute time frame. Here we go. So you'll see these on these low time frames. This will work on the 5-minute, the 6-minute. You got to check different time frames and look at your money flow, and you will find these. Here, once again, it's a valid bearish divergence with money flow. Money flow is lower, price is higher. It's like it hit liquidity lines up here. You had shark fin, you had an RSI divergence, so you draw your Gann box and wait. And then a little while later, price comes and taps it, and bam, Like it's even above a value line. So that's like a textbook classic, easy algo trade. But with the money flow divergence, it really spices it up. So you could have entered your short here and had you could have made a killing. But the thing is, too, this is a 6-minute time frame, so you're not going to get some crazy move. It may just be a bigger move than normal because of the money flow divergence, but it's not always like a long-term reversal. It may be like you're catching a swing on like a medium time frame, but it looks really good on the 6-minute because of the money flow divergence. Let's see. Yeah, let's check this 5-minute. Here's one on the 5-minute, and R-weave. And you have this bullish money flow divergence. In this case, you did not get a demand zone hit. Well, maybe you did. Maybe you did. I didn't draw this one. But sometimes you won't get it. And it was so quick, though, on this time frame. I guess, kind of. If you look at it like this, on the low time frame, it would probably reveal. But like the price came up aggressively, and then it kind of came back down and wicked here. If it would have hit here, it would have been nice. But with these low time frames, you're not always going to get a retap of the zone. So on the low time frames, you can look for your shark fin, and that is a nice looking shark fin. Super shark fin, you could enter there, because not only did you have the shark fin, you had the money flow divergence, and that was a good sign that you were going to have a nice move. And this, I mean, wow, 6% in 3 hours. That's 2% per hour. That's pretty good. 10x leverage, really nice, and it's so easy to spot, and these are pretty solid. So that's why I like to trade this way, because the money flow doesn't lie. It can invalidate, but you'll see it if it invalidates. It's not as tricky as some of the other trading styles. It's very simple, in my opinion. Let's see, syrup 5-minute. I don't know if I marked this. Yeah, here we go. Here we go. It's a bearish scenario. This one, it didn't hit it. But you have your bearish money flow, and your price went up. You got your divergence. It taps liquidity. Once again, you draw your zone, but it did. In this case, it didn't hit it. It kind of did here, like with these little wicks. It kept wicking. It was a good sign that it was going to go down, but then it had, kind of tried to retrace and couldn't make it. You're also getting closer to, the money flow started coming down really sharp. And then all of a sudden, this is something to take notice of. It went into red money flow really quick. Of course, it's a lower time frame, but then you had a bearish shark fin above a value line. That was a really good sign to enter here early, but the whole premise of this is just to show you that these money flow divergences do signal kinds like lower time frames, even signal like lower time frame reversals, and higher time frames are very major reversals. So you can find like reversals in the trend with money flow, and that's really what this is. So you still need to use your tools. You still need to use your risk management, your stop loss. You still need to follow the easy algo rules for IndicatorX, and it's wise. But when you get like more experience with this, and you start to see different scenarios all over and over, you'll notice all kinds of little things, which I don't have the time to go into everything. Really, there's so many I could look at. There's so many, and I've got to get on with some things I need to do. There we go. This is IO and 5-minute, and then you had another one. So there it is. That's how you do it. That's the refined process. It's pretty simple. It's really simple. you're you're not always going to get the box on the low time frames, but if you get the money flow divergence and you draw your supply demand zone box, you usually get a pretty good entry. And if you find it on the high time frame, you may get an entry on the high time frame that is, what's this? I'm going to pull one up real quick. If you might be able to turn a scalp into a swing and make a killer profit. This does happen more like often on higher time frames. Let's see, I can't even remember what time frame this was on. It sometimes they occur on multiple time frames, and that's one more thing I wanted to say. If you look on the divergence, if it shows on multiple time frames, and especially when it's been like deep in the money flow on one side, not crossing over to the other side, like red and green and red, if it's been in there for a long time and then it has a divergence, it's going to be a big move. And there was something else I was going to say. Anyway, when you have this, you're basically catching the bottom, a big bottom, and on the high time frame. So like if you get in, if you had your zone marked and you got in on that, I don't know exactly which time frame it was I was looking at. I don't even know if this one had it. Demand zone. This was more of a double bottom. You will get double bottoms as well. It's almost as if it tried to go back one more time to hit that liquidity, and it didn't. And it kind of hit this because this one's the bottom. So let's look at it. None of the candles closed below it. And then you had this major wick here. So that was a sign that you're going to have a move. So you could have even entered here or here, and you're good. But, oh, yeah, that was what I wanted to say. If you find a money flow divergence on like the 4 hour, and then you're waiting for it to play out, and it's still got a lot of down pressure or up pressure, and then you find a money flow divergence on like the 5 minute, those usually are really good because it's like the lower time frame money flow divergence will kind of push the higher time frame. When the low time frame plays out, it'll kind of push it to cause the higher time frame to play out often. It's like the start of it. That you'll find that, say if you use the 4 hour for your bias and the 5 minute for your entries, sometimes you will find a divergence on both time frames, and those tend to be very choice. So I hope this video helps you. If you're going to trade like this, do me a favor, and if you win some trades, like tag me in the results when you show your P&L and the trading results, because I'd like to see, I'd be really happy to see somebody make some money off of this. And I hope to show you like what I can do with it soon. I haven't even really tapped my potential. I know I've been studying this for a while. I see a lot of things with it. And I basically shared this right as I learned it. I had seen it for a while, but didn't fully understand it until I studied it more. And things just popped out at me and my eyes were opened. And the whole time, TDIX has had this money flow on here the whole time. And a lot of people didn't use it. They turned it off. And, this money flow helps you get an early warning sign. There may be, SMCX sign like a CISD right here at the same time. There might have been one right here. I bet you there was. But the money flow kind of showed you even before it was going to happen. So money flow divergence is very simple. It's very easy. And TDIX is totally the bomb. It is. If you're watching this video and you don't have EasyAlgoIndicators, I don't know, what you're going to do, but I would totally be like, okay, I think I'm going to try to get that and trade like this because this works. And there are a ton of ways to trade, but TDIX is my favorite indicator with EasyAlgoIndicators and IndicatorX. They're just so simple to me. Once you learn it, it's really simple. And they offer a lot of trades on different time frames. But yeah, with that being said, I hope this helps you. Please tag me your trading results. I'm interested to see if you're in the community and you're watching this. I might not make videos this week. I might not be chatting a lot this week. I'm going to trade this week. I'm going to focus on trading and show you my results. I just haven't really put forth a lot of effort to do it, and I have to have time and have everything set up and my living situation and everything. So I'm trying to trade now to get to better myself. You know, I need Starlink internet because my internet stinks. I need to get some things, so I've got to trade and I've got to hit it hard this week because I mean, I may have some major life changes occurring soon, and I have a lot to think about and stuff. So if you can still ask me questions in the Discord and just send me a friend request and send me a direct message, a DM or whatever, that's great. Otherwise, I'll just see you in the chat, and yeah, I hope this works for you. Have a great day.